What is up, my friends? What's up? What's up? What's up? What's happening, everyone? How you guys doing? Let's get these comments here up on the screen. Welcome to my live here. We're switching things up a little bit, if you noticed, and we're going to do a live on Monday morning this week, just for fun. Let's have a good time here on YouTube. Let's see what happens. Usually we're doing videos, guys, on Mondays and Wednesdays. We're going live on Fridays, but today we're doing a little bit differently. So we'll have some fun with that. We'll see how that goes. And we're talking about an awesome topic today, which is the mortgage loan crisis. So I've been talking about this on my show for a little bit now, and that is the fact that there are so many people on YouTube talking about kind of the demise of the real estate market, the fact that the real estate market is going to crash. All these things are going to happen, and so today we're going to talk about that. Is that true, or is that just kind of doomsday marketing here for everyone to get scared? Is that freaking people out? Is that being done for clickbait? What is the deal with the housing market? What is the deal with interest rates, inventory, and everything in between? So we're going to talk about all those things, but what I want you to do right now, coming in here, give me that big thumbs up on the live. Throw something in the chat box. I'm in the chat box, and I'm going to say comment here. So I'm in the chat box. Throw your comments in there, not in the comment box, because that is a little bit different. We're talking about the chat box, as my dog says hello. The beauty of live, we get to do everything right here on the screen. So that's what we're doing today. We're going to have some fun with that. We're going to talk housing market, and let's just go ahead and dive right in. Lots of interesting, amazing stuff actually happening, on the real estate side, on the housing market side. There are so many things going on right now, and thank you for you guys jumping in, and we're going to get right into it. So as you all probably know, unless you've been living under a rock somewhere, interest rates have been going up. And the reason interest rates are going up is because the Federal Reserve is raising the federal funds rate. So what is the federal funds rate? I get that question a lot. Is the federal funds rate the actual mortgage rate? The answer is no. Those two things are actually very different. The federal funds rate, which the Fed controls, that is the rate that banks charge to each other for overnight transfers. So banks are always loaning money in, or borrowing money, I should say. They're always loaning money out. And so that rate that they get when they borrow money is called the federal funds rate. That is what the Fed controls. Of course, guys, what happens is as the federal funds rate gets more expensive, they have to charge more on the back end. So they got to charge more for the loans that they make. Hence, the interest rate on mortgages goes up. Now, if we keep kind of talking about this, what happens with mortgage rates, of course, is most people who buy a house get a loan. That is just the fact of the matter. I think it's something like 90-something%. There are cash buyers. However, guys, and you'll hear about that all the time. Oh, these cash buyers are, stealing all the houses. Cash buyers are buying everything. While that sometimes is the case, a lot of times what happens is, and having a real estate team that I've run for a long time and own brokerages, I can tell you about this. What happens a lot of times is that people will buy a property with cash, and then they'll either refinance it out with a loan, or they will put in an all-cash offer to make their offer look super strong, but then at the end of the day, they'll still get financing. And by the way, if you're wondering, is that legal, is that appropriate? Yes, it is. You can put in an offer, all cash, and then during the real estate transaction, you can still get a loan. Now, the catch with that, we're going off on a little bit of a tangent, but the catch with that is you can't cancel based on a financing contingency that you don't have. So typically in almost every real estate deal, if you're getting a loan, there's going to be some sort of financing contingency which says, okay, if I can't get the loan, I can cancel the deal, get my deposit back, right? Well, if you put in an all cash offer, then you decide to go get a loan, you can't cancel because you didn't get the loan. So that's the only catch. But the cash buyers, a lot of times, are not really cash buyers. So, by the way, guys, thanks if you're joining me here on the live. We're doing something a little bit different, which seems to be going really well. We got a lot of viewers. We got a lot of you coming on. So thank you. I appreciate it. If there's a topic you want me to talk about on the channel, throw that in the chat box, and we will make a video about it. And if there's a question you have about what I'm talking about right now, which is mortgage rates and housing market, then put that into the chat box as well. I'm in there. I'm chatting with you. Thanks for the thumbs up. Give me that thumbs up as well. We're at 3 likes on the video, 3 thumbs up. Let's see if we can get to 10 real quick. So if you're watching this right now, hit that thumbs up so that then YouTube will show this to more people. We can spread the message and spread the word. So as I drink my water, guys, let's get to kind of what we're talking about. And we're talking about housing market crash. You've seen a lot of people talking about that on YouTube. Excuse me. I made a video about it, and happy Monday morning, by the way. I made a video about it saying that, I'm not so sure, like everyone else is saying on YouTube and in the real world, that there's going to be this crazy housing market crash. And thank you guys for that thumbs up. We're up to 5 here as I'm watching this. So let's see if we can get to 10. Fatima, hello. Thank you for being on. Appreciate you. So, Reba, thank you, says hello, Dima. Thank you, thank you. So let's talk about that, guys. So one of the articles that came out recently is, again, about mortgage rates. And let me show you what I mean here on this article. It's a really good article from the Mortgage Bankers Association. So let's get the screen share going. Let's move our screen over a little bit so you guys can read this. And we do have a question. So as I'm pulling up the article and as we kind of talk about what the article says, let's see what people say. So again, guys, we're talking housing market, we're talking housing market crash, and of course, we're talking about how mortgage rates impact that. Let me move myself over so I'm not so weird in the screen. There we go. We got it all rocking. Okay. So before we get to the article, let's take a question. So JR's got a question that is so appropriate. JR, thanks for being on the broadcast. I appreciate you. Putting the question in. Let's go ahead and throw that up here. So here's the question, right? So JR says, I'm finally at a point where I can purchase a home, but this seems to be a horrible time to buy. And then Reva actually said, I'm right there with you. I need to purchase for my father, and it seems like a very bad time to buy. So let's talk about this, guys. So let's go back to this, and let me talk about this, right? So these are great questions. We have more of them coming through, and I will get to all the questions. And by the way, if we get to all the questions that you guys have and we don't get to the article, that's okay. I will get to the articles a little bit later, and I also have some cool charts and data that I want to show you, so we'll definitely get to that. But let's talk about these questions because these are amazing, amazing questions. So, JR, here's my answer to this. So I'm going to put I'm not going to put my real estate broker that wants to sell you a house hat on. I'm going to put my consultant hat on as what I do on YouTube here. So here's my advice. And my advice to you is what I spent over $100,000 of law school tuition to learn. And that is the very intellectual answer. It depends. And here's what it depends on. It depends on what your ultimate goal is with that property, okay? So you said you're finally at a point where you could purchase a home. I'm going to assume that to mean that, you have a down payment, your credit is where you want it, and you're ready to buy. And so the reason I say it depends is it depends on what your ultimate goal is with the property. I'm going to start with you're buying the home for yourself to live in as your primary residence, okay? Because that's what the majority of people are doing. And if that is what you're doing, JR, then I am going to say that there is never a bad time to do that. And I'm going to back that up with some data because I'm going to show you a chart that backs that up. But here's why I'm going to say that. I'm going to say that because, number one, the premise here is that it is impossible to time the market. Sorry about the dog barking, guys. Hey, that's the fun of doing this live, right? So it's impossible to time the market. We're going to start with that premise. So whenever you buy, you really never know, is this the top? Is this the bottom? Are we going up? Are we going down? You don't know. Okay, and so what you're trying to do when you buy a principal residence is first and foremost, you're trying to give yourself housing and shelter. And of course, you're investing and you want to build appreciation. But the number one objective is housing and shelter. So what you want to look at is, am I better off buying or am I better off renting? And if you look at the data, you're better off buying. Second thing you want to look at is, as we talked about, interest rates, mortgage rates. Okay, and guys, thank you so much for being on today. Appreciate you guys. It's a nice Monday, beautiful Monday morning. Thanks for jumping on the broadcast. Such an important topic. Mortgage rates and real estate market, okay? So if you're buying for yourself, the data shows that there has never been a time over a 7-year period where the real estate market has gone down, okay? Never, right? So if I look at the data, it just hasn't happened. And I'm going to actually show that to you right now. Let's go to the charts. Let me show you something really cool. Let me do the screen share thing. Here we go. Okay, so check this out, guys. So this is the Fred chart, median housing price data. Let's move this over so you can see it, okay? And I'm going to show you this is the median housing price in the United States back since, on this, you're seeing it since like 1975. Okay, so if you look at it, check out where we've had some dips, okay? So we had a dip here, you can see here. Right there, there's a little dip, right? So we went from 70,000 to 66,000. That's what, 5% or so? And then we were right back up. And you guys give me one quick second here. I need to change something on the settings because something looks weird. So give me one quick second. I will be right back, guys. All right, that is updated. Sorry about that, guys. Had a little setting there that was bugging me. Okay, so I updated the setting, and here we go. Okay, so if you look at this, as I was saying, right, if you check this out, and thanks for sticking with me here. If you check this out, guys, on the chart, we had a little dip here in the early 80s, right? So if you, let's just say, for example, JR and Reva, okay, you bought and you were, you really screwed up and you bought at the height of the market, okay? And you bought at $70,000, okay? Which now seems like crazy, right? And the next year, 1982, you dropped 5%. So now you're thinking to yourself, oh, shoot, I screwed up. I'm down 5%. But watch this. End of 1982, we're back up to almost where we were. And by end of 1982, we're over where we were before. So you thought you messed up, but you really didn't. And I don't know where interest rates were, but I can tell you in the early 1980s, interest rates were like 18%. My parents bought a house then. So anyone who says, oh my God, if interest rates get to 6 or 7%, no one's going to buy. That's a bunch of baloney, guys, because people bought at 18%. People bought at 12%. I bought my first home, it was 6%. So, mortgage rates have been so low recently, but that's a recent phenomenon, right? So let's keep looking at this. So JR, this is for you, my man, and anyone else. I know a lot of people have this question. Let's keep looking. So prices keep going up, and then watch this. 1990, boom, here's the height, 126,000. Let's just say again, you bought at the very top of that. So watch this. Now they drop back to 117. So this was, just watch the monitor here. This was Q2 1990, 126,800, okay? Q2 1990. By Q3, they're way down, okay? And the number is 126,800. Let's see how long it takes us to get back there. Okay, this was a long one, okay? There it is, 126. Okay, 127. So by Q2 1993, we're back above where we were. How long did that take? That took like a year and a half, okay? So once again, if you bought, you were down maybe for a year and a half, and then you're back up, and then watch this. Bam, housing prices are going up again. Okay, next big dip, and here is the big one, guys. And so if this one doesn't scare you, then nothing will. So watch this. This is the big one. Q1 2007, we are at, let's see, where are we at? Ooh, lost my cursor. There we are. Q1 2007, we're at 257,400. This was the subprime mortgage market crisis, kind of like we're talking about right now. Are we in a real estate bubble? Is there going to be a real estate crash because of mortgage rates? That's what we're looking at right here. And if you're just coming in here, thank you so much for coming in. Give me a thumbs up. We are 2 thumbs up away from the immediate goal, from the intro goal here. We want to get to 10. So if you're jumping on here, give me a thumbs up. All right, so Q107, 257. Of course, we see the big crash related to subprime housing market, which we're not going to see this time, by the way, guys, because those dynamics are not in play. All right, I'll show you some other stuff, but those dynamics are not in play. We may see a correction in real estate prices. It's not going to be because of this. Okay, so 257,400. That was Q107, okay, following me, Q107. So watch this. We went down from 257 all the way back down, and let's see how long it took us to get back up. 258,400 was Q1 2013. Okay, so this is the biggest one that we saw in in recent times, the biggest crash, okay? And it took from '07 to 13, so 6 years. And what did I tell you at the very beginning of this? There's never been a 7-year period where real estate prices went down. So that was a very long-winded answer to tell JG and Reba that JR, I'm sorry, not JG. We have another fan named JG here that I talk to all the time. So JR, okay? So this is a long-winded way to tell JR and Reba, if you plan to stay in the house for 7 years or you plan to own it for 7 years or more, okay, and that was the worst one, right? Then I would recommend lock in a great interest rate because you can still get one right now. You don't know how high they're going to go. They may go to 6%, they may go to 7%. Lock in a 30-year interest rate. Get a great house, and if you're going to stay in it for 7 years or more, just don't worry about it because your goal, again, is living and living and shelter. And if it goes up for, and by the way, guys, I want to just go back to this. That is if worst case scenario, you bought at the absolute worst time. Well, right now is not that. At least that's not what I'm seeing. Prices are still heading up. Mortgage rates are going up, but prices are still going up. So this is not the absolute worst time. So let's just say you bought in '06 when you were at like 243. Well, you saw a little bit of a run up, and then it came back down, but then it went back up. So you didn't see 6 years of that. You maybe saw 4 years until you got back to where you were. And let me just share my personal experience with you guys. So I bought, and this might be relevant for a lot of you. I bought my first home in 2004, right here, Q1 '04, okay? I had just gotten married. We bought a house, Q1 2000, and was it 2000? Yeah, it was 2004. I had to think about that for a second. 2004, okay, is when I bought my first house. Actually, I think it was Q2, okay, 2017. And at the time, people were kind of talking about the same stuff. There were a lot of rumblings about, the market and what's going to happen and all this stuff. We bought our first home. And we thought, man, prices are so high. It's crazy. Should we be buying right now? Is it a good time? Just like you guys are asking. We decided to go ahead and buy a property. And it was one of the best decisions we ever made because, look, we saw a run up all the way into '07. Then we saw everything come back down. But look, remember, I bought here, 2017, 217,000, I'm sorry, 600. Then the prices came back down. So for a little tiny bit, we were under where we bought it. And then it went back up. I finally sold that house this last year, 2020. Okay, 2021 actually. And when I sold it for like double of what we bought it for. It ended up being an investment property for us, right? So if you look at that decision made me a lot of money. It got me into buying real estate. And at the end of the day, unless I desperately needed to sell it for this 1 year period, I was not losing money. So if you're buying a principal residence, guys, what I would tell you is, ignore the noise. Don't worry about all the people saying, all these doomsday things. Lock in a great interest rate, buy a great property, live in it, enjoy it, and don't worry about the rest because if you stay there for 7 years or more, you are not going to lose money. It's just, listen, I can't predict the future. Obviously, this isn't financial advice, but I will tell you that it hasn't happened in the past. And so I don't see it happening in the future here in the United States, especially if you're buying in good markets. Okay, now let's turn to investors. We have any investors on the show today? If you're an investor, let me know in the chat box here or give me a thumbs up right now. Let's get to that number 10 that we wanted. Let's get to 10. So if you're an investor, the analysis is slightly different, okay? And obviously, if you're an investor, the analysis is, as you look at this chart, where are we right now, okay? And here's where we are. So I want you guys to take a look. I'm going to zoom this in. Let's really zoom in this chart right here, okay? So I want you to see where we are. So we have seen this huge, huge run up right there, right? So we were Q2 2020. Everyone knows what happened there. That was the beginning of the pandemic, okay? And when you look at this and you see this huge run up, if you're an investor, that makes you a little bit concerned, right? I mean, we've gone from 322,600 to 423,600. That is, just by rough math, what is that? That's 100, that's $100,000, right? And so $100,000 on $322,000 is like, 35% in a couple years. That is a huge, huge run up. Is that sustainable long term? I would say no. You can't do 15, 20% run ups, right? And just keep going. That's not going to happen. So if you're an investor, what you need to look at is if you're buying a property and you're buying it to flip it, I would say this is a time to be very cautious. You got to be careful, and you got to make sure you don't get caught where the market comes back down to the norm here. Because if you look at the chart, guys, if you look at this chart, you will see kind of the trend line, right? I don't have to draw it. You could see it. Here's the trend line. We are above that trend line by a lot. And if you look historic trend lines in real estate, it comes back down to the trend line at some point. So what I would recommend you do is if you're buying a house to flip or you're buying a development, which I am doing here in the Dallas area since that's where I've moved. If we have any people from Texas in the house, give me a thumbs up. Let me know. If you're from California, where I used to live, I'm sorry to hear that. Maybe you'll join me and move at some point like everyone else. But anyhow, if you're an investor, you just got to be careful and you got to build that into your margins, okay? So that's the idea there. And Patty, thanks for being on. Here's the question from Patty. She says she's an investor, realtor, landlord, and raw landowner. Well, look, I think that, again, if you're an investor right now, you just have to be careful and you got to build extra margin in. So what I'm doing personally on mine is when I run my numbers and I look at my spreadsheet, I'm just building in some cushion and some padding in my analysis to make sure and say, okay, look, if everything goes as planned, if the market continues to appreciate, for a little bit, then, it's going to be great. I'm going to get, 100%, 120% return. But if I build in my cushion and the market pulls back 10% or maybe 20%, I'm still going to make money. It might be a little bit less. It might be 40%, 30%, 20%. And if I'm okay with that margin, then I will continue on to what I'm doing. And so that's kind of the answer there. As a landlord, Patty, I will tell you you're in good shape because rents are very high. I don't really see rents coming down. There's a lot of demand for rents. And by the way, if the higher interest rates go, those buyers will typically come out of the real estate market because now they can't afford to buy and they need to rent, so demand for rents goes up. So as a landlord, you're actually in a good place. As a raw landowner, I think you're in a great place to develop something or sell it. Raw land is becoming very, very expensive in every area that I am looking at. So I think you're in a good place there. And then JR says, I'm still in California. All good, man. We were there for a long time, finally decided to move. I've done a lot of videos on that, and probably one of the best decisions we ever made. Loving it here in Texas, which has always been my favorite state. Texas and Florida, really, and that was proven true. So, guys, let's jump on into the article. Let's talk about mortgage rates. Is there a mortgage crash, a real estate housing market crash coming because of the surge in mortgage rates? There's a lot of people saying that there is. If you've been hanging around on YouTube or even in real life, you know that people are saying, hey, mortgage rates are going up. There's going to be a crash. Watch out. Be careful. Oh, there we go. We got another thumbs up. Okay, we're at 9. We need one more to get to where I wanted, which is 10 initially, and then maybe we'll set a new goal. That's what we're all about here. And thank you guys for joining me on the channel, by the way. Really appreciate it. We talk housing market, we talk real estate, we talk finance, and we talk fun and freedom topics too. So let's talk about mortgage rates, okay? And let's see what all the craziness is about. Let's see what everyone's saying, and let's see why everyone's going so nuts. So there's a good article here from the Mortgage Bankers Association, okay? And let's take a quick peek at this and see what it says, if I can get it on the screen properly. And I did not. Hold on, let me just move that around a little bit here for you guys so we can read it. And there we go. Okay, great. So mortgage applications. No, I still can't read it. Sorry, guys. Hey, that's the beauty of doing this live. Let me move this over. And there we go. Yes, I got it. Hey, it's a Monday morning. Thanks for giving me some leeway here. Okay, so mortgage applications decreased 8.3% from a week earlier. So what that means is less people are getting mortgages. Again, as I mentioned before, most properties are bought with a mortgage. So if less people are getting mortgages, that means there are less buyers in the marketplace. Less buyers means less demand. let's keep going, right? So this is a measure of mortgage loan application volume, and it decreased 8.3% on a seasonally adjusted basis. On an unadjusted basis, the index decreased 7%. Okay, the refinance index decreased 9% and was 71% lower than the same week 1 year ago. Now, guys, I'm not as interested in refinances. The reason that they are so much lower, of course, is because the interest rates are higher, right? So if the interest rates go up, people don't refinance as much because they just their original rate is probably pretty good. So we're not going to worry about that, okay? Now, here's the crux of the article. Here's what we really want to talk about. With mortgage rates increasing last week to the highest level since '09, applications continued to decline. Overall application activity fell to the lowest level since 2018, with both purchase and refinance applications posting declines. Okay, we won't worry about refinance again. The drop in purchase applications was evident across all loan types. Prospective homebuyers have pulled back this spring as they continue to face limited options of homes for sale, meaning the inventory is lower, along with higher costs from increasing mortgage rates and prices. The recent decrease in purchase applications is an indication of potential weakness in home sales in the coming months. Okay, so this is a very, very important paragraph. And here's essentially what it says, and here's essentially what this boils down to, guys. If you're just joining me, thank you for being here. Here's what this boils down to. As mortgage rates go up, less people can afford those houses, right? That just makes sense. And so demand for housing comes down. Real estate, you guys, is always, at the end of the day, fundamentally about supply and demand. So as demand comes down, then we will see potentially a downward pressure on home prices, although that may not actually be the case. I'm going to show you something else that proves that point. So what the doomsdayers are saying about the housing market, what the doomsdayers are really focused on is this right here. Interest rates are going up. There's going to be less demand. Housing market is going to crash and come down. Okay, so is that actually true? Well, let's take a look at something else. So let's take a look at, not that. Let's take a look at this. Okay, so what this is some data from Redfin that shows some pretty interesting statistics, okay? And oh, there we go, guys. Thank you so much. There we go. I think I have sound effects on this. I just need to find them. They're somewhere. They're somewhere. And I can do a really cool, oh, here we go. Sound effects. There they are. So applause. Thank you guys for, let me turn that up. Let's do that again. Thank you guys for giving me the 10 likes that we talked about very early on. Let's keep going. Let's see if we can get to 15. Let's see if we can get to 20. And thank you for jumping on the video, guys, and sticking around here. I appreciate it. We got a bunch of new people on. Really appreciate you guys. We're talking real estate and housing market, and we are talking about mortgage rates, and are the higher mortgage rates going to crash the housing market? We just looked at a chart. We just looked at an article that says that because interest rates are up, mortgage applications are down about 10%. That means that we will see less demand in the coming months. Is that going to actually cause a housing market crash? And that's what we're looking at. Let's take a look at some more data, and then we will look at a conclusion based upon that data. And by the way, guys, this is how I will tell you that I kind of come across, or I go at all of the decisions that I make and all of the analysis that I do. Let's look at the data, not the drama, as one of my mentors used to say. So forget about the noise, forget about the fake news, forget about the reporting. Let's look at the actual data, and then let's make our own decisions and make up our own minds based upon what we're seeing. And I kind of do that with everything, whether it's investing, whether it's real estate, whether it's business, whether it's politics, whatever it is, that's how I do it. And I definitely recommend that for everyone else. Filter out that noise, right? So let's take a look at this. So this is a really interesting chart. So what this shows us, guys, is new listings. This comes from Redfin. New listings, we're doing all metro areas, and these are all the years. So what you want to pay attention to here is the black line is 2022, okay? And if you look at the black line 2022, this is new listings coming onto the market. This is supply. This is an indicator of supply. So we just talked about demand. we're now kind of shifting to talk about supply. And if you look at supply is pretty much in line with 2019, 2021. What it's not in line with is 2020. That's our red, but that was because of that little health thing that happened. So when the pandemic first started and everything shut down in 2020, basically no one put their houses on the market for about 90 days. And not 90, I should say 30 to 60 days. Everyone just paused. No one did anything. And the reason that happened was because everyone was freaked out and they didn't know what to do. No one was giving any direction. No one knew what was going to happen. You couldn't do any showings. You couldn't do any open houses. And everyone thought the world was coming to an end. So no one put their house on the market. Everyone just kind of hunkered down, right? And by the way, guys, if you're just joining me, chat box is the place to go. Throw your comments and chats in there. If you have questions, I'll answer them. JR had a great question earlier. We answered that one. Reva did as well. So thank you for your comments and chats in there. So new listings are pretty much in line here with what we've seen. So supply is not really going crazy. I want to show you guys a couple other things here. So there's some other charts that we should definitely take a look at. Homes sold, pretty much in line with what we've seen, right? Median sales price, we know, has continued to go up at a very, very hot clip. If you look at this year over year, 16% appreciation. So if you listen to us last year, if you've been supporting the channel for a year or more and you've been listening, and I've been saying, hey guys, I've been saying the same thing I've been saying to JR really, which is like, if you need to buy a house for your principal residence, buy it, lock in that rate and move on. Don't worry about timing the market, right? A lot of people say with investing in financial markets like stocks, you know, it's not about timing the market, but it's time in the market. The same thing goes for real estate, right? So if you look at median home sale price, you see that has continued to go up. You know, we're up 16% year over year. And before I get to some more charts, let's say hello. Hey, Blaine, what's happening? Thank you for being here. Hello from SoCal. He's still trying to get out. Just make the decision and go. You know, and guys who've been following, just personal side note, we left California last year, middle of last year, and haven't really looked back. Texas has been great. The kids are having a great time here. I'm loving it. So much to do, so much fun stuff, and most importantly, you know, small government, less regulation, less taxes, more freedom, which is really what I'm all about. So if you like that kind of stuff, I would highly recommend you get the heck out of California. But hey, that's a whole different video. Blaine, thanks for being on, man. Really appreciate you. And guys, keep giving me those thumbs up so YouTube keeps showing this to more people. If you just jumped on, thank you so much for being on. So median home price continues to go up. Let's look at a couple other things, and then I'm going to get you to kind of the most important chart, okay? Median days on market. This is how long it takes to sell a house, okay? How long it takes to sell a house. Median days on market right now is 16. And guys, that is extremely, extremely low. If you look, that's under last year. It's actually under every year. It's the lowest it's been in a really long time, okay? Lowest it's been in a really long time. So here's a chart that a lot of the YouTube gurus are pointing to say, oh, well, here's where we get the housing market crash. Here's where the interest rate surge is really going to cause that real estate and housing market crash. And what they're talking about is listing price decreases. Okay, so take a look at this. So if you look at the black line, which is 2022, what you will see here is that there have been way more price drops than before. And if you look on the chart down here, which is year over year, you can really see it, right? So price drops way up. What that means is people decreasing the price of their listing. So they put it on the market, it doesn't sell, and they lower the price. Let me tell you what my take on that is. My take on that, when you take it in context with the other charts, is that there's a lot of people that are just getting extremely aggressive with their pricing, and then they're being taken back down to reality because of the interest rates and just in general because of buyer fatigue. So like I said, I used to own real estate brokerages. We have a real estate team, and we have a lot of buyers who are fatigued, they're pissed off, they're upset, they're frustrated. And the reason is because, you know, they've been trying to buy a house, they keep getting outbid, or the prices keep going up, or whatever it is, or there's nothing on the market. And so because of that, you know, they're getting frustrated, and, you know, they're saying we don't want to buy anymore. There's a lot of other sellers who are saying, oh, you know, my neighbor sold their house for 500,000, let's list ours for 550. The neighbor sold for 550, let's list ours for 600, because prices are going crazy. And then no one's buying that house, and so the prices go down. I think this is probably more a function of that than anything else. Now, is it associated with interest rates going up? Of course. Interest rates go up, people have to drop their prices. There's a little bit of downward pressure on prices. Is it a crash? Well, not what I see. And now, guys, I'm going to get you to, in my opinion, what is the most important chart, the most important graph that we look at. And before I get there, let me just share with you why that is. The most important thing in real estate when you look at it is supply and demand. So right now we know that we're going to have a little bit less demand. That's a given, because mortgage rates are going up. So if mortgage rates go up, there's less demand. We talked about that here on the show. I've talked about it a bunch in other videos, right? So what about supply though? Well, a lot of people are saying, hey, people are, builders are building with a fury. They want to increase the supply. More people are putting their houses on the market. We didn't see that yet in the charts, but it's coming. And so that's what's going to cause, this crash. The real analysis of that is a chart called months supply of inventory. My all-time favorite chart. Whenever I need to just get a snapshot of the market, I look at months supply of inventory. What months supply of inventory tells me is how many months of inventory of available houses are there if nothing else came on the market. How long would it take to sell out of what we currently have? And thank you for that like that someone just gave me. How long would it take to sell out of what we have? I'm going to give you my favorite analysis because I love Jordan shoes. If you like sneakers, if you like Jordan shoes or whatever it is you like, just pretend that you go to the store and there's like 50 pairs of these things, but there's 100 people outside to buy them. They're going to sell out in about a minute. But if there's 50 pairs and there's only 2 people outside to buy them, might take them longer to sell out, right? And you guys gave me some thumbs up, so maybe we got some other Jordan fans in the house, right? And so month supply of inventory really tells me everything I need to know about the housing market in a quick second, right? So if month supply of inventory, guys, is between about 3 and 6, that is called a balanced market. We have about the same number of buyers and sellers. There's houses coming on the market. People are buying them. It's getting replenished, okay, between 3 and 6, okay? Anything above 6, so you see a 7, 8, 9 month supply of inventory, what that means is that now you have way more supply than there is demand. So that's the example where there's 100 pairs of shoes at the store, ain't no one buying them, right? There's 1 or 2 people buying them, and so what happens, of course, as you could guess, is prices will come down. The inverse of that is also true. If you see a 1 or a 2 month supply of inventory, that means that the inventory can't keep up. Inventory can't keep up with the demand, okay? And so what happens in that case is prices go up because you got 50 pairs of Jordans, you got 1,000 people outside that want to buy them. Well, the store isn't dumb, and the store says, hey, we can raise the price on these things, and that's exactly what happens in a free market. In a capitalist market, free market, supply and demand will eventually balance out. That's like economics 101 in high school or college. Reba, a great comment. We don't buy Nikes anymore because of Colin Kaepernick. So we won't. This isn't the political video, but I will say that I can't keep track of who I'm supposed to boycott, who I'm supposed to cancel. So I still purchase and use the products and services that I like. I will tell you, I was never a Disney subscriber, but if I were a Disney subscriber, I probably would have canceled that one. But anyhow, we digress. Thanks for being here, guys. I appreciate you guys. And as I gave you that run-in and that lead-in into the month supply of inventory chart, let me actually show it to you. Let's see what we're doing here. So let's go back to screen share. Okay, so here's our month supply of inventory chart. Okay, so this is actually weeks supply. Is there a month supply? No, month supply of inventory. So they have it in weeks. All right, whatever. Look how weird this is, though. It says months supply of inventory right here on the chart, and then it says week supply of inventory here. Get it together, Redfin. This is why I don't like Redfin. Get it together, man. Make sure your charts match up. But anyway, that's not the point of this. The point of this is we're going to show you what this means. So remember, this is weeks. Okay, so right now, let's go right there. We are at 6.8 weeks. Now, I was not a math major. I went to public school, but 6.8 weeks is like a month and a half. Okay, so we are at a month and a half supply of inventory. Remember what I told you before I showed you the chart. Anything under 3, seller's market, heavy seller's market. Okay, we're under 2. That is a heavy, heavy seller's market. Okay, and if you look back at years past, you know, it was 2 months in 21. In 22, again, guys, this was that little blip I told you about, you know, because of what happened. So people weren't selling, people weren't buying. I kind of throw 2020 out. You know, you can actually, I can uncheck it. You know, the only reason I have it is just so you can see. But you know, and let's go back a little bit more. We can look at 12 weeks of data. So as you can see here, you know, it's low, man. I mean, so month supply of inventory is extremely low. If I come over here on the year over year, it's the same thing, right? This is where the 2020 really screws things up. But if you look, it's the same thing, right? We are, you know, less than last year in terms of months supply of inventory. And again, we are under 2 months supply. That is extremely low. So when will I get concerned? Now, I'm gonna give you that I look at everything through kind of an optimist point of view, through the lens of an optimist, because that's just what I am. I posted a good quote. I'm gonna read it to you. It's Winston Churchill's quote. I want to make sure I don't butcher it, so I'm gonna read it to you. And the quote is, where is it? I just put it on my Twitter this morning. By the way, guys, Twitter. I swore off Twitter before Elon announced that he had purchased 9% of the company because I just had enough of all the trolls and the anonymous nonsense and all the BS. But then, you know, Elon's going to buy it. I want to support that, and I hope he can clean it up, get rid of all the anonymous bots, get rid of all the spam and all the nonsense, and really make it a great place for public discourse in both directions. So I posted a quote this morning by Winston Churchill that says, let's go back here. Hold on. I don't know why I'm still in screen share mode. Posted a quote on my Twitter that says by Winston Churchill, a pessimist sees the difficulty in every opportunity, an optimist sees the opportunity in every difficulty. I think that's a great quote. So, so when you look at this, right, and you look at the chart, when will I get concerned? Well, I will get concerned when we see the month supply of inventory start to go up. Okay, if you see this right here start to go up here and you see a trend like this, like for example, like that. So you see this start to happen, right? Well, now I'm going to get concerned because this is the chart that will show me that there is something going on in the market that I need to be extremely concerned about. Okay, right now what I'm seeing is yes, interest rates are going up. Yes, we have less demand, but we still have low supply. Because we have very, very low supply, what's happening is the demand is still not enough to eat up all that supply. Let's go back to our Air Jordan example. You got 50 pairs of shoes. Yesterday you had 100 people outside. Today you have 75 people outside. Well, yes, you have 25% less demand, but you still have more demand than supply. And so because of that, the price of those shoes still isn't going to come down. It's the same exact thing here, right? Yes, we may have less demand. Yes, we may have less buyers in the marketplace, but that still is not enough to eat up all the supply that we have right now. Now, could that change drastically in the next couple months? Yes. And if we go back to our article that I was reading from, right, here's what it says, and here's where we continue. In a period of high home price growth and rapidly increasing mortgage rates, borrowers continue to mitigate higher monthly payments by applying for ARM loans. So people are starting to get different loans and different loan types, and that's something that we haven't really touched on. But with that, what happens is, you know, let's say the 30-year fixed rate's at 5%, and you can get an adjustable mortgage at, you know, let's say 4% or even 3%. Buyers will do that if they're not going to stay in the home for that long. So back to our question earlier, if you're buying right now and you plan to stay in a property for 10 years, grab a 10-1 ARM. You may not need a 30-year fixed if you're not planning on staying there for that long or keeping it for that long. If rates go down in the future, you can always refinance. Obviously, guys, look, I'm not a mortgage lender, I'm a real estate broker, but I've seen enough transactions to know that that's what people start doing, and that's evident in this article. The ARM share of applications last week was up over 9% and 17% based on dollar volume. And that just makes sense based on what's going on. And that will continue. People will continue to do that. So guys, thanks for being on. If you have questions, throw them in the chat box and I will answer them. We've had some great questions, some great comments in there. I really appreciate you guys. Thank you for being on. Great topic. So now that we've looked at the data, let's talk about some conclusions. Well, what do you think? What do you think about all the data that we've seen here? We know mortgage rates are going up, right? Is that cause for concern? We know that month's supply of inventory is about the same. That hasn't changed right now. So is that enough to mitigate those higher mortgage rates? Are higher mortgage rates going to cause a U.S. housing market crash? That's really the ultimate question, or when. And here's where I'll get into my conclusions. A lot of people say that there's going to be this huge, crazy crash, and I will tell you that a lot of these people always predict a huge, crazy crash, right? And if you're a pessimist, and you're always predicting a crash, and you're always predicting a decrease in prices, at some point you're probably going to be right, okay? Because at some point there is going to be a correction. Now the question in our case today is, how big of a correction is that going to be? And what I will tell you from what I'm seeing right now is I don't see a crash coming in the next couple months, that's for sure. Even though rates are higher, there's still enough demand to outpace the current supply. That's evident in my month supply of inventory chart. So my conclusion is we're not going to see that now. Now, are we going to see a crash in a year? Are we going to see a decrease? Well, we have to see some sort of pullback in the market. If we go back to our median housing price chart, and there it is. If we go back to our median housing price chart, right? This is not sustainable. This cannot continue, right? And it never continues. If you look back in time, and this started in 1965, if you look back in time, look, we had a huge run up here, we had a correction. We had a huge run up here. We're going to see some sort of correction. That cannot keep going at 15-20% a year. That outpaces wages, it outpaces inflation, and there's not enough money there to continue to do that. Okay, now the U.S. printed, of course, a ton of money in the last couple of years. A lot of other things happened, and so we've seen a big increase. So what I see going on, guys, in the future here is we will see a pullback. Is that going to happen in a year? Is that going to happen in 2 years? We don't know. And so if you're buying for yourself residential real estate, right, I would say lock in a great rate, get a great house, move on, live in it, enjoy it. Don't worry about it. If you're buying for investment, make sure that you're building in a cushion in your margins just to make sure that you don't get stuck with something that you don't want. And then Patty, thank you for the question. Thanks for being on. And the question is, what's your take on the rental moratorium being discussed in many states? So thank you for putting that in there. And guys, by the way, if you have questions, throw them in the chat. I'm happy to answer those there. Love to answer those. Appreciate you guys. So rental moratorium. So if you're Patty, are you talking about the rental moratorium that a lot of states are discussing in terms of capping rent increases, rent control, things like that? And if that's what you're talking about, I'm ultimately in favor of free market in just about every situation. My parents came to this country in the early 1980s from the former Soviet Union, from a communist society that was fixed, okay? And so my take on everything is, America has become America based on a free market and capitalist society. So in general, I will tell you, I don't like regulations, I don't like high taxes, I don't like big government. Because of that, I moved to Texas. And by the way, that used to make me kind of middle of the road. I guess now that makes me a radical right-winger. Maybe not. But, that's kind of my perspective on things. So I don't like rent control. I'm not a fan of it. I don't like moratoriums. I don't like price fixing. I don't like any of that kind of stuff, especially by the government, right? One thing I will say in terms of, affordable housing, obviously affordable housing is necessary. And I think it's a good thing when there is affordable housing. I'm just not in favor of the government fixing those prices. And Patty, it sounds like you agree with me. So thank you. I'm not in favor of the government fixing prices on things like rent and things like that. I just don't like it. I think that the market will figure things out. If people need affordable housing and they can't get it in the city, they'll move out to the suburbs. If businesses can't afford to be in an area like California, they move to Texas, right? And so that's what we see in free markets. When the government starts getting involved and setting prices and fixing things, that's when we get into a lot of problems. I mean, look at places like California. Rent control is crazy, so the cap rates on your investment properties go way down. People don't want to buy there, or people move, or people leave, and then the prices come down. The prices are artificially deflated. So I just don't like it, and I don't like any of that kind of stuff. So great question. Thank you so much for being on. Well, guys, I hope you guys enjoy this kind of interaction and the live. I know I do. Again, like I said, we're doing videos on the channel Monday, Wednesday, live on Friday. Thought we'd switch it up this week here as we start May. By the way, tomorrow, May 3rd, is my birthday. So just to throw that out there. So I won't be doing a video tomorrow, but we'll do one on Wednesday, and we'll do one on Friday this week. If you're not subscribed to the channel, make sure you do that. Thank you so much for the thumbs up. I had a goal of getting 10 thumbs up. We got 15, so I appreciate that. We'll keep doing the lives. We'll keep doing the videos. We'll keep talking about finance, freedom, and fun on the channel. There's JG. See, JG, earlier we had a guy named JR, and I accidentally called him JG. But there you are. Thanks so much, man. Appreciate you being on here. Blaine, thanks for the happy birthday wishes. I never work on my birthday. I don't know. I've always had a tradition. Turn the phone off, don't work, go do something fun. And so that's what I'll be doing tomorrow. Hope you guys have a great day, great week. See you guys on the video on Wednesday and Friday this week. And then we'll do another live, maybe Friday, maybe Monday. I'll let you guys know. Thanks for tuning in, guys. Have a good one. I'll chat with you soon.